Hello, dear traders. Hello, my dear friends. How is everybody doing today? I want to welcome you to Olymp Trade. My name is Angie. I am a financial analyst with Olymp Trade, and during this webinar, we are going to talk about the Forex market cycles. As always, let's go ahead and first check the sound and the picture. Please let me know in chat. As always, let me know what country you're joining me from today. Let me know if you're new or if you've been here before. You can just simply say hello or put a plus sign so that I know that you can hear me and that you can see me well before we get started, my friends. While I'm waiting for your reply, as always, I want to remind you to please make sure that you are subscribed. Give this video a thumbs up, show me your support, and of course ring the bell so that you're always up to date with our notifications, with our releases, whenever we start our live streams, whenever we release our videos. You don't want to miss it, so definitely make sure that you are subscribed and ring the bell so that you have our notifications. Alrighty, let me just check in chat how everybody's doing. Pradeep Yadav is from Dubai. Hello. SM Study Group, any risk-free trade, Angie? Yes, actually, everybody, please pay attention during my, speech or during my presentation. And at the end, I will be asking you guys 3 questions, and I will be giving out 3 risk-free trades. Each person can only win 1 risk-free trade, so just pay attention to the information. And at the end, we'll go ahead and take a quick little pop quiz and, of course, give out some risk-free trades. Shabana Khan, as always, nice to see you. Mohammed Tarek is from Egypt. Hello, hello. Madhu, thank you for that confirmation. Jaya Shri, hello, all fine. Mohammed, let's see here. And we have Leonard is watching from Namibia. Alrighty, well, thanks everyone for that confirmation. I'm glad that you can hear me and that you can see me well. So let's go ahead and start with our topic. Now, my friends, what we have to understand is that the market moves in waves. I'm sure many of us already know this, and it has a tendency to repeat itself. This is actually why we often look back in history to get a confirmation of strong levels of support and resistance. As many of you recall, there are 3 things that can be happening to an asset. We can have an uptrend where the price is rising. The asset may be in a downtrend where the price is steadily heading down, and the asset can also be in a flat. It can be moving sideways. Let me just check back in chat. Now, while I'm going through my presentation, I'm probably not going to be in chat too often. I'll get back to chat in the end. Alright, so the market can be moving sideways. Now, different markets have different cycles, and when we are speaking about market cycles, it usually refers to the stock market and higher time frames. Some market cycles can last for 100 days, and some market cycles can actually last 5 to 10 years. Today, I'm going to try to make things as simple as possible, and we'll discuss daily and weekly market cycles. Because I do realize that the majority of us trade on lower time frames, especially if we are new to trading. I also want to mention that last year has been abnormal, to say the least. All of last year and until this day, the world is clouded by the pandemic, which of course has reflected on the markets as well. So the market cycles may not be as steady or as clear as before, but we can still observe and trade the cycles just with more caution, keeping in tune with fundamental releases. Market cycles are identified by extremes, maximum highs and maximum lows. The maximum highs being our resistance and maximum lows being our support areas. As I already mentioned, cycles can be different. If the price is moving sideways, let's go ahead and start with my first example right here. or you can actually look at this example right here. If the price is moving sideways in a range between a max high resistance and the max low support, this is actually also called a cycle, because the price reaches the max, where the bulls, the buyers, aren't able to push the price higher, and the price starts to fall. Also, we can see this right here. Well, this is a much better example right here. So reaches the max, the highs, starts dropping. Reaches the max, the highs, starts dropping. And we can have a likewise scenario on a downtrend where the price reaches the level of support, where the bears, the sellers, they can't push the price below this level, so the price starts rising. This part where the price is moving in a range, it can actually also be called the accumulation stage. It's like the stage of preparation before we have a move. Now, I know I've mentioned this before, and this is important to understand and to remember, is that the price is not going to remain in a range forever. Eventually, we are going to have a breakout. And when that breakout occurs, we can expect that the price will move in the direction of the breakout until it reaches the next level of support or resistance, where the price is likely to stall, retrace, and again, possibly move in a range, accumulation stage, until the next breakout. Now, the price may not always move in the direction of the breakout, but there is a high probability that it will. Here I do want to mention a few things. You have to remember that the longer that the price remains in a range, in a flat, the stronger the breakout is going to be. To avoid a false breakout, we can do a few things. Actually, Yaroslav recently had a fantastic video on breakouts as well. If you're watching this video after the webinar, you're going to see a hint come up in this upper right corner. Now, to avoid a false breakout, we can do a few things. One thing is that we can wait for at least 2 closes above or below the broken level. And we can also look for a retest. This means that when the price breaks a level, often it will come back to retest the level and then proceed in the direction of the breakout. Let me go ahead and show you what I mean. So here we see that the price was arranging. It was flat. It was moving sideways. Then we see that the price broke this level. And then we see that this candle right here came back to, can I actually extend this a little bit further. So after we had this break, the price came back to retest. Let me go ahead and show you a better example. This is another accumulation right here. We see that the price broke this level of resistance, and the next candle came back to retest this level as support before before proceeding in the direction of the breakout. I'll make sure to go ahead and show you some more examples as well a little bit later. So we can see we can have a tight range, or we can actually have a more a wide range, and of course we have movements and accumulations. Now also, so these ranges can look different. These accumulation stages, sometimes it's between 2 parallel lines of resistance and support, and sometimes it can actually look, it can be in a triangle or in a wedge. So these are all different types of accumulations and different types of ranges. Another interesting thing to notice is that right before a breakout, not always, but quite often, you'll see an accumulation of small body candles before the move. And you may also observe different patterns at the key levels, which provide a confirmation signal. Let me go ahead and show you what I mean. So basically, for example, right here, we have this accumulation stage. And we can see that right before the breakout, we have an accumulation of these small body candles before the breakout. I think I'm going to show you some more examples on some lower time frames a little bit later. Also, as a confirmation signal, as I just mentioned, we can look for potential patterns. Like, for example, right here, I found this. So we're near the bottom of the channel, near our support level. And right here, we have a bullish engulfing. Okay, this green candle actually swallowed the two previous candles because this close, yes, this close is actually higher than this open. So this is a bullish engulfing. And another example that I can show you right here, and this is what's going on. This is the Euro US dollar. I'm looking at the daily time frame, my friends. Here we have a morning star. What's even more interesting is that this is also the beginning of the trading week. Okay, so this is the 18th. So this is Monday. We have a morning star, so we can expect that the price is going to rise for the duration of the week. So the market cycle is about identifying key levels of maximum highs and maximum lows, key levels of support and resistance. It's about watching the price to see what it is doing and where it is according to the previous historic lows and highs. So it's basically about looking and waiting for signals to enter a trade. Since we're still on the higher time frame, I do want to show you something. This is March of 2020, and this right here is obviously January of 2021. From here to here, I think that we can consider this actually a cycle. Let me go ahead and switch to a higher time frame, the weekly time frame. I can show you that this low right here can be considered a strong level of support because it was last visited in 2017. It was acting as support right here in 2016 as well as 2015. So we are at a serious low. The price was at a serious low right here. It was around 1.06. And here in January, about 1.23, I'm just giving an estimate, is also a very strong key level of resistance. Why? Because last time it was seen as the middle of the channel right here in 2018. And if we look further back in history, this level of resistance actually acted as a strong level of support. This is our weekly time frame back in 2014, my friends. And what I wanted to, my point that I'm trying to make is that this market cycle right here lasted about 10 months. So this is more for like investing and more for like long-term trading. Obviously, of course, we can utilize this and trade all of these movements on lower time frames, and we'll switch to that in just 1 second. What I wanted to mention is that basically what we had right here, we had the accumulation stage. Then we had the smart traders get in on this uptrend. Here we had a retracement, another accumulation, and here is where market players and traders and investors, they see that an uptrend is actually forming. So these are our latecomers, and this is not latecomers, but this is actually where I guess the majority of market players got in on this uptrend. Here we had some choppy weather. We traded in a wide range between a level of support and resistance. And here, I guess I would say, is where the latecomers came in and tried to grab a little bit of money. You know, oh my goodness, we missed out on this uptrend, but we're still going to try it. So here are the latecomers, and now we are likely to see a retracement to the downside. Now the price can go higher, as we saw in history in 2018. I'm not going to switch back to that chart yet, but as you can see, this was the middle of the channel of that range trading. So there is a potential to move higher, of course, but we have to take note that this is a strong level of resistance. The price is quite high here, so we're possibly not going to find a lot of buyers at this point. They're going to look for some lower prices, opportunities to enter buy trades. And now let's go ahead and switch to the hourly time frame so that we can understand, that we can see a similar scenario. to see how we can trade it on some lower time frames. Let's go ahead and start with the beginning right here. So what we can observe is that we had an uptrend right here. The price broke this trend line. Okay, so we broke this uptrend, started to a downtrend. I can say that the price broke this trend line and it came back to retest it as resistance. So we broke support, the price came back to retest it as resistance. We had this accumulation stage and then we started a downfall. If you're looking at this spike right here, yeah, this action right here, this is actually the non-farm payrolls on January the 8th. So this is why we had this a little spike here. And I do want to mention, as you can see, we have some bigger body candles here. And right before we start our move down, we have these small body candles. Let me go ahead and show you right here. So we had an uptrend. And then we had an accumulation stage of small body candles. And then we had a breakout to the downside. And likewise, I want to show you right here. Again, the price reached a strong level of support. Angie, why is this a strong level of support? Let me go ahead and show you. So right here, if I'm just looking at this picture right here, obviously I can't see is this a strong level of support or not. And actually I had a stream yesterday about the things that we should pay attention to before we enter our trades. And this is where we basically identify the market structure and identify key levels of support and resistance. So I switched to one higher time frame. Even if I can just extend it like this, I can see that this is a strong level of support because it was met as support here in this area, and it was acted as resistance, broke out and a breakout above this level as well. So this is a strong level of support where the price started rising. Oh, let me go ahead and switch to my hourly time frame. This looks different. Alrighty, so and again, once what we see is an accumulation of small bodied candles before the breakout, and as you can see, the price came back to retest it as support before moving in the direction of the breakout. I also want to mention that we have to keep track of I'm sorry, excuse me. We have to keep track of the trading session openings. And I also want to advise for you to watch the price action on Mondays whenever the market opens after the weekend. A lot of times the direction that the price takes at the beginning of the week during the opening of the trading sessions after the weekend is not always, of course, but it can often point the direction of the price for the duration of the week, okay, or at least for a few days in the beginning of the week. And actually, this is the scenario that we saw on the daily chart. One second. So this is the morning star that I was telling you about. So this is the beginning of the week, and as you can see, the price is steadily rising during this week. So let me go ahead and switch to my hourly time frame. 1 second. So once again, this is the beginning of the week. This is the beginning of the trading session on Monday. Wait, where is it? Okay, so this is where the markets opened. We had a breakout, and we can expect that the price will rise for an extended period of time. Now, of course, we had the inauguration, which is these big candles. Excuse me, forgive me. It's getting to the end of the stream. I started thinking to myself. So basically, this is where the inauguration was, and this is the beginning of the trading week. We see that we had a morning star on the daily time frame. I do want to also mention that you should pay attention to the beginning of the trading sessions during each day. This is important because a lot of banks and other large financial institutions open for business, and this is why we have a lot of action. We see action start when the markets open. For example, right here, this right here. Okay, this is the beginning of the London, the European trading session, and as you can see, we have a massive move down, and the price started moving down. This right here is also the beginning of the European trading session. As you can see, we had small body candles for a few hours right here. 1, 2, 3, 4, 5 for 5 hours. And then we had a spike. And then the price started moving in the direction that the price took at the beginning of the trading session. So, my friends, I know that we covered a lot of information today. So let's do a quick little recap before we proceed with our quick little pop quiz to give out some risk-free trades. Okay, so market cycles are different. When the price is in a range moving between an extreme high and extreme low, this is actually also called a cycle. When the price is in a range, this can be called the accumulation stage and the beginning of a cycle. When the price breaks out of the range, when the price breaks out of the range, trading can be called the second stage of growth or of decline until the price reaches the next level, key level, where it may trade in a range again before the next breakout. Since many of us trade on lower time frames, we should consider the opening trading session on Monday. As I just mentioned, often the price starts to go where the price starts to go in the beginning of the week. When the markets open is a direction where we can expect that the price will continue going for the duration of the week. We should also consider the opening of the daily trading sessions for price direction. Because during the opening of the trading session is when the banks and other large financial institutions open for business. And so, my friends, it is important to keep track of key levels of support and resistance and also use additional indicators for a confirmation. Another thing that I wanted to show you very quickly right now, we are just looking at the hourly time frame. Let's see what is going on with the price of Euro US dollar right now. So we took our trend line. We have a channel right here. Okay, so we can see that this is of course an uptrend channel. We see that the price is actually close to the upper boundary, to our level of resistance. So opening a buy trade here would not be wise. We would want to wait for the price to retrace. And of course, we can also use additional indicators like the different moving averages, for example, or whatever it is that you like to trade with for a confirmation. I just want to show you, I was checking this previously, I just want to show you this is actually a very strong level, because this is actually where the 200 EMA is right now. So down trades are probably more favorable at this time, but we do have to understand, you know, the inauguration and the US dollar is weakening. So but this is how I just wanted to show you how you can use these levels and for breakouts and for a confirmation and for the guidance direction of the price movement. Alrighty, my friends, so I think I just wanted to mention that of course this may seem a little bit complicated at first, but I promise you that you will get used to it, and it's actually very interesting once you get the hang of it. Practice makes perfect, and it doesn't cost you anything. So go ahead and pull out a chart, take out your drawing tools, and look for levels of support and resistance. Look for these short body candle accumulations before a breakout. Look at the different breakouts so that you can see where there's a valid breakout, where there's not a valid breakout, so that when you practice, when you observe these levels, when you draw these levels, you are gaining experience so that it will become easier for you to identify future moves. Alrighty, my friends. So I think now is the perfect time to go ahead and give out our risk-free trades. I don't have a presentation. I just have 3 questions for you guys. What I'm going to do is, I do understand that there may be a slight lag in the video. So what I'm going to do is I'm going to go ahead and post the question in chat. And then I'll verbally say it. And the first person that answers correctly in chat is going to win a risk-free trade. Okay, so question number 1. An extreme max high of the price is also called the what level? Once again, the extreme max high of the price is also called the, yes, Jayashri Ravi Kumar. I do hope that I pronounce your name correctly. Of course, we did start with an easy question. Jayashri, please kindly send your account ID number for me in chat. You are our first winner of the risk-free trade. And yes, everybody else also answered correctly. It is indeed called the level of resistance. So once again, Jayashri, please kindly send your ID number in chat. The second question, and I did cover this today. Okay, let me go ahead and copy this ID number down. I got it. Thank you so much. Alrighty, so the next question, it's going to be a little bit harder. The second question is, what are the two ways that we can confirm a breakout, which we discussed today? Okay, so what? Small candle, no, that is not the correct answer. That would be the first one. What are the two ways to confirm a breakout, my friends? No, I'm not sure. The small body candles, my friends, that's when we are looking for the accumulation before the breakout. Okay, yes, retest is one of them. Retest is one of the So you guys were not paying close enough attention when I was telling you about this. Let's see. If nobody answers correctly, I'll go ahead and take the first one who answered retest first. Break of trend line. Well, yes, retest is the first part of it, but there was another thing that I mentioned today that we can. Oh yeah, Jai Shri that is the correct answer. But as I mentioned earlier, each person can only win one risk-free trade each. So let's see who is going to copy that answer. Okay, the first part is retest. The second one is, yes, Jai Shri. Yes, that is the correct answer, but you already won one risk-free trade. So I'm looking for the next person to catch on and okay. Mahdu Rayal, I see that you got it right. So yes, I guess there are different ways and different approaches. Mahdu Royal, please go ahead and send your ID number in chat. One of the things that you can do is you can wait for at least two closes above, for the candles to close, two candles to close above or below the broken level. And we can also wait for a retest. So Mahdu Royal, congratulations, you are the winner of the second question. Waiting for your account ID number in chat. I see you. Thank you. And let's go with our third question. And now I did repeat this a few times, so I hope that you guys are definitely going to get it. Alrighty, so the last question, question numero tres, number 3. Why do we see a splash of volatility, of action, of price movement when a trading session begins? Okay, so of course, and we discuss this at the end of the stream, at the end of the presentation. So let's see who's going to get. Okay, I'm going to go ahead and I'll accept Rohit Shukla live. Parag Rumba, because new sessions begins. Well, yes, but what does this mean? Exactly why do we see a splash of activity? So I'm going to accept Rohit Shukla Live's answer, banks enters. I do understand that what you mean is that, you know, the banks open and other financial institutions as well. So our winner of the last question for today is going to be Rahit Shukla Live. Go ahead and please send your ID number for me in chat. My friends, I do hope that this stream brought you some new information that you can use in trading. I hope that this will help you become more profitable and help you enter more trades. Okay, I'm just waiting for our last winner to send the account ID number. That is Rahit Shukla Live. I see you. Thank you so much for that. Well, my friends, once again, I just want to thank you all again for joining today. We just recently, about an hour ago or so, Yaroslav released an awesome video about Joe Biden, the inauguration, what it means for the markets now, and what's going on with the whole presidential election and the 1.9 trillion stimulus package. So definitely make sure to check it out. I know a lot of you are interested in further guidance as to what's going on with the new president. So definitely check that video out. Once again, thank you so much for joining. I want to remind you, as always, my friends, please make sure that you are subscribed. Give this video a thumbs up if you enjoyed my stream. And of course, ring the bell so that you're always up to date and that you don't miss out on our notifications. Once again, thanks so much for joining, and I will see you next time. Bye-bye.